Welcome to Crypto Disrupted. This is Trent Lipinski, and I'm here with Bharath, and he is working on a crypto exchange. Can you tell us a bit about what you're working on and how you got into crypto?
Yes, I'm I'm the CEO of Leverage, and Leverage is a decentralized futures exchange. There are a lot of decentralized exchanges, but very few that do derivatives. And I got into crypto pretty early in around late 2011. There was a Wired article about the crash and death of Bitcoin. Bitcoin had crashed from the
Yeah.
crazy, unimaginable price of $30 to something like $2. And it was all about how it was a cool idea of geeks playing with the money and, it's all over and everything like that. But when I saw the chart of Bitcoin, and I've been a trader for a long time, I could see that this is something that is going to explode near term. I wanted to see how much of a long-term potential this has. And as I read more about Bitcoin, I read the white paper. I went to bitcointalk.org. I think there was only like one or two forums at that time. I saw the activity, and I saw there's almost a new startup every day, new idea, just smart people, brainstorming and creating new projects. I knew that this was the new revolution. This is something that would be like the internet for the next 2 or 3 decades. And I wanted to do something that was new and powerful and perfectly suited to this new medium. And since I've been a futures trader for a while, I realized that Bitcoin is a pure transfer of value. There is no, there's no worry about maintaining voting rights and things of that nature. So I decided to create a futures exchange on Bitcoin. And eventually we pivoted to Ethereum because we could do complete non-custodial, not having, once you remove anyone's need to hold someone else's money, a lot of the evils of trading disappear.
So for the audience, can you kind of explain, if they're not investors, what futures are, what derivatives are, how that kind of works so that they can kind of get an idea of, what your platform and what you're working on, and kind of have some of the basics so that they have an understanding?
Yeah, futures and derivatives are essentially a product that actually trades on something else. It's derived from some other product. As an example, oil futures, you don't actually trade oil. You trade a notional value of a certain amount of oil. The reason futures exist is that it brings two parties together, one that wants exposure to volatility, the other wants to avoid the exposure to volatility. And classically, futures are from the agricultural market. So let's say you're a farmer and you want to produce a bunch of corn or wheat or something like that, but you need to be able to sell each bushel of wheat at a certain price for it to be worth your while. And right now the price of wheat may be good, but by the time the harvest season is over, it could be worth zero or close to nothing, and that would be a severe financial stress for you and your family. If there is a future, you could simply sell a futures contract, and you would have the assurance that even if the market price were to drop, you would still get the price that you sold at. And this enables all sorts of risk management. It enables business continuity. It reduces the effect of shocks to the market. A very recent example is when there was oil crisis in 2008. Oil prices went to $148 a barrel or something like this. Yeah. And every single manufacturer was almost driven out of business. Every airline, all the manufacturers of SUVs and trucks, they all assumed the oil prices would be low to flat, but that was something they had to hedge against. The only company that famously did reasonably well was Southwest, because they had oil futures. And that's what you do. You buy futures on your inputs and you sell futures on your outputs. That enables you to manage your risk across a certain length of time for you to avoid really a disastrous shutting down of your company.
And can you kind of go into derivatives and, how that was also kind of a factor in what happened in the 2008 market crash? Can you kind of speak to that a little bit?
Right. So derivatives, when done properly, are stabilizing to the market, and when done improperly, they are destabilizing. The reason is they amplify whatever gain or loss you could have. And what happened in 2008 was there were a series of derivative products. They did a few things. The housing market was overheated. They created the subprime and the securitized mortgages. There was credit default swaps, and a lot of these products were built with the assumption that everything would continue to go as it would be. And when the underlying market collapsed so badly, the entities involved in these contracts could not meet their obligations, and the collapse of one sort of cascaded into the collapse of another, and it was like a domino effect. And the government had to step in. A lot of this was really just the incentives were not balanced. You need for something exotic like credit default swaps, I think it is hard to model anything, and you really should only maybe not be that greedy and put such a big position. I don't know what other way to
So you got into crypto in 2011 then, compared to, having seen what happened in 2008 and that market, and now where we're at in 2018, what trends are you seeing? Where do you think we're at right now? Like, what do you think kind of the future holds here? What are you seeing right now?
I mean, with the proviso that anything I say is going to be obsolete probably in a month because the market moves so fast and things change rapidly. The early market was really very, very experimental. It was just, a whole bunch of cypherpunks, libertarians. There was people who were just excited by technology, and people who wanting to create different things that were not possible before a solution to the Byzantine general's problem. And as time passed, you got more and more bigger, more sophisticated people building real products like, Coinbase. You can compare the difference between Coinbase and say Mt. Gox. There is already a big difference in the quality and the gravitas of the team behind it. And once you had venture-backed companies come in, that gave the ordinary audience a lot more incentive to come in. They were a little more braver, and that started pushing the price up, which starts bringing in more people and sort of cycle. The 2017 was very interesting because of the whole ICO boom and the altcoin boom, and the large amount of activity that started going into Ether. And before that, a couple of years ago, it was all Bitcoin. And this sort of is simply, I guess, natural development. When a market just starts taking off, there is always a lot of variety. There's a lot of diversity in projects, and as the market matures, there'll be consolidation. So as the market matures, you will see consolidation, and if it does not, if it's still very diverse and very rich, it means there's a lot of unknowns and there's a lot of opportunities, and it's a very exciting time to be investing and innovating. 2017 was very interesting because we saw world governments taking notice, regulators at least starting inquiries. This is an acknowledgement that this has already become mainstream. And I believe that despite the recent bear trends, it is a very healthy process. The volatility should reflect, the price should reflect uncertainty. And I think that we'll come out of this much stronger. The market will continue to develop, or at least another decade.
And so can you talk about what you're working on, with your project and, how that plays into the current market and why you made the decision to work on a decentralized exchange?
Right. So the cool thing about Bitcoin and cryptocurrency at the currency level was that it decentralized payments. It enabled people to have custody of their own money, and it enabled people to interact without a third party needing to do anything. However, these properties, these valuable properties that make cryptocurrency so much more valuable than fiat, when you have one Bitcoin at something like 10,000 times the value of a dollar, this value exists because of these properties of autonomy and control. We wanted to bring these properties into the rest of the financial system, into the exchanges, really everything, banks, lending, anything you can do with finance. It would be great if you could eliminate or at least minimize the need of a third party to do something. And the reason we are doing exchanges is that it's the biggest use case for cryptocurrency right now. And until exchanges are decentralized, it will be hard to build the next layer on top. So when we are trying to do decentralized, what we've noticed, and we've been trying to do this since mid 2014, 2015, that when you try to do everything on chain, there is, there's just no capacity. You will never grow to be as big as the traditional financial markets. You will remain a marginal niche hobby thing. So what we try to do is to try to do as many things off chain. And recently, we've been able to have the same footprint as a centralized exchange by using something called Plasma. This is a new technology that the Ethereum community is working on, and we've been able to create a version that is based on accounts and that doesn't have some of the issues that a UTXO-based Plasma has. So you will see when our exchange goes live, it will essentially work at the same scale as a centralized exchange.
Okay. And what phase are you guys at right now? Is this an alpha, beta? Are you doing an ICO?
We have proceeded with the development. We are close to launch a few weeks. We already have the engine. We have a test environment running for people who want to try it out and give us comments. So it's running on testnet, but it's not fully functional. There are pieces that are still being worked on. But yeah, in a few weeks we will at least launch on testnet. And once we are sure that there are no major bugs, the audits of the smart contracts are complete, bug bounties are all live, then we will launch on mainnet.
And it sounds like you're really focused on building a scalable solution here. Can you kind of talk about that a little bit more?
Yes. So if on most blockchains there is simply a limit on how much you can transact. It's just a mathematical limit that is you just cannot exceed it. So as an example, on Ethereum, if it was only used by one exchange for decentralized trading and no one else was doing anything on that network, you could only scale to the size of Coinbase, which in related terms to the broader financial markets is very, very tiny. And that's not a feature we want. We wanted to create, so I'm from a financial background. I've worked on Wall Street for 10 years. I've been a futures trader. And I know that I wouldn't, as an institution or as any large player, I wouldn't trade on some place where the trading would be limited to something as small as that. So we wanted to build something that not only scales, like that doesn't have the blockchain as a barrier to the amount of trades you can do, but also have other pieces in place for large institutions to trade. If you look at current decentralized exchanges, most of them haven't even thought of how to do an API key. And what happens in a big institution, and not even a big institution, even a moderate institution, is that there's a treasury department which handles the funds, and traders actually do not have access to the funds. They have access to trade through their system. But the treasury department, which contains, which is made up of people who have extensive background checks, who have all the training to handle large amounts of money. They're the ones in charge of holding the money. So we are putting those things in place so that institutions can trade with us directly. For example, we enable trading through multi-sig accounts. If you ask any of the other decentralized exchanges, they just assume that everyone has their own private key and they'll all have their money and they'll trade. But in a true institution, no one is going to say, hey, I'm going to give 5 million to each trader and let them trade as they want. It's just, it's a violation of several regulations. It's a failure of controls, and it really is not realistic.
So you're ultimately building a decentralized exchange for institutional investors with similar protections and similar mechanisms to how the existing financial system works, but for cryptocurrency.
Yes, in a way that is correct. In many ways, we are different. There are some things that are absolutely needed by any large entity, and we are building those things. Some of the things we, like a lot of the regulations, we prefer to bake it into the protocol instead of actually hiring a staff of, I think Coinbase has 20-25% of the staff just doing the regulatory stuff. So for us, it's actually simpler to just bake into it and have cryptographic proofs of compliance or violation, which means that, let's say there is a violation of a certain regulation, we can show that whether it's happened, or we can show that it's not happened with cryptographic proofs. And I think this is essentially the future. We move away from paperwork and we move into mathematical proofs.
So you're automating the process then. So ultimately, you're looking at the existing system and saying, okay, where can we innovate? Where can we automate some of these processes where there's paperwork, where there's unnecessary due diligence, and how do we use cryptography and how do we use technology and use the blockchain to actually solve some of those problems, automate those processes, and make the process simpler so these institutional investors get the same protections, the same kind of mechanisms, but they're not having to manually have people sitting there touching all the little different aspects of their investment portfolio.
That's correct. We have spoken to regulators and we have described what we have. We have showed it to bankers, and they all understand it. There is just the fear that if they don't do the paperwork, if they're not actual reports, and then there is some penalty. And this is something we have to work through with the regulators. What we want to say is we don't match your requirements, we exceed them, and we don't exceed them by an inch, we exceed them by a mile. Mm-hmm. Because on my exchange, for example, I can prove that money laundering is not possible. It's just not even possible. Whereas no bank can give that guarantee.
Yeah.
Same the section of funds, we can prove that the funds have never been commingled, which is not, it happens all the time in the broader market, the bigger financial markets. And this is how a lot of the old institutions, failed. MF Global, I believe, and a few others failed because they moved the client's money into their own money to cover their own positions. It's simply not possible, even if you want to do in our system.
Well, and I think that's kind of what's interesting about the blockchain is ultimately it is a more secure solution. So, a lot of people don't realize that, there's a lot of insecurity issues with the current system and the current financial markets, and the methods and the technologies they're using are, some of these technologies are literally 20, 30 years old. These are old technologies. These are, centralized proprietary systems that, aren't necessarily maintained to the best standards. You're connecting different financial institutions, different banks, different systems. It's a mess, to be honest with you. It's just a total mess. So the blockchain and crypto kind of allows for a reboot of the system so that we can create a solution that builds security into it from the get-go. So
Yeah, that's correct. And it's not just security, it's accountability, it's the ability to forge records, it's the ability to delete records.
Transparency, yeah.
Yes, yes. And when you could put in all the reporting and all the things in place, but you are you have no actual way to prevent something from going bad, right? When um, the person who sends the reports, they can actually send you anything they want, and all you can do is wait for the disaster, then go look at the paperwork and say, well, you submitted a fraudulent report, or you did this and that, I'm going to prosecute you, and that takes a few years. I think MF Global thing is still not settled. It was so long ago. And what we believe is, we believe in that most things you can prevent, you should just prevent. Think about you flying on the airplane, right? Would you rather have them x-ray the luggage to make sure there are no bombs, or would you rather have them fill out a paperwork, have a know your passenger paperwork, and then follow up after the plane has crashed? It doesn't make sense. It is
Yeah.
always simpler to prevent something than to just create paperwork and hope to prosecute after the thing actually goes bad.
Mm-hmm. Definitely agree. No, I'd much rather make sure that there's no bombs in the
Exactly. Yeah.
in the luggage before it gets on the plane. So yeah, no, definitely. So so you said there's some differentiators with what you're building. Can you kind of go into those a little bit deeper? Like what are the major innovations that you're able to make on your platform to kind of enable, or your exchange really, to kind of enable, these protections?
Well, there's a few things. We have a philosophy of something called provable compliance, and what that means is any action ultimately is tied to the private key of the person who controls the funds, and that is a provable link. And whenever the funds move, there's a hash of the previous state that is in the new state, and that can be it's sort of like a blockchain in the sense, and you can prove that nothing has ever been, you can prove the correctness of every state change, right? The second thing we have is we have something called zero knowledge API key that enables you to institutions to support trading bots or arbitrage bots without having placing the key that controls their funds on that bot. So it's a lot safer. We have we also work with various institutions in making sure that they can integrate with our system. You have with the Treasury Department, we have enabled the separation of that. We have AML without KYC, which is we don't actually need to take anyone's identity to prevent money laundering. We just it's designed within the system itself. The product itself has something called atomic stops. It's essentially can never go into so it's self-clearing. It never goes into a state where someone owes money that they cannot pay.
Yeah.
So all of these are needed to ensure that the system can pretty much run without a lot of intervention. In broader markets, if something goes wrong, someone cannot pay, then ultimately at the clearing, the agency is responsible for dealing with that situation. So we want to remove a lot of these things because it has to feel just like dealing with the Bitcoin network. You want to do an action, you just send a transaction. The rest of it, pretty much the system takes care of it. You want to remove as many roles as possible. You want to remove someone who audits things, someone who, if there is the need for some sort of central entity to do something, then the more of these entities you add, the more fragile the system is. The less the number of roles you have, the more robust it is. And so that is how we try to design the platform.
And what cryptocurrencies are going to be tradable on your exchange? Are you going to do altcoins, or is it just major, some of the bigger coins, or are you going to do ERC 20 compliance? What can you trade on the exchange?
Right. So our exchange is built on Ethereum. So it's mostly just ERC20 tokens against Ethereum. We can definitely provide futures on any currency, any cryptocurrency that has sufficient liquidity and volume that we can create a reference index. So, for example, we would be able to trade Bitcoin futures on, using Ethereum as a currency. We could do that for any other, Litecoin or any of these coins that have sufficient liquidity. Um, Definitely, we can have futures on liquid ERC20 tokens. There are a lot of products we can actually build. We can have options. So a lot of these are really dependent on two things. One is there sufficient liquidity? Is there a market maker willing to make a market on these products? What we have seen is that you can create a product, but if there's no market maker, then you just have just a bare order book. No one comes there. There's no point in building the whole thing, right? You just proved some technology point, but it's just there's no real huge value add to that.
So are you going to start with select order books for certain cryptocurrencies initially and then slowly add others, or what's kind of the game plan to get that started?
That is correct. So our platform has two tokens. One is called Lev, that enables people to access, gives people access to the platform. The other is called Fee, which is sort of an accounting system that makes sure that people can, their trades are covered, the cost of their trades are covered. And we'll start with these and just maybe a few select tokens. We will also, our main aim is to offer derivatives. We are going to do spot because we need to, but our main purpose is to create derivatives market for Ethereum and the top cryptocurrencies. In the future, depending on the demand and liquidity, we could create futures for commodities like gold, silver, oil, and so on.
Okay. So you're planning to expand outside crypto potentially into more traditional assets then?
Our vision is that in say 10 years, crypto would be 50% of the global trading market, maybe more. Just like internet commerce is 50 or more than the traditional retail market. And there are several reasons for this. One is, crypto is global. I could set something up, someone could go to their webpage and just start trading pretty much immediately. The whole world could start trading. It's not that easy when it's a traditional market, to trade on CME futures. You would have to have a dollar account. You would have to create, have to get an account with an FCM. And a lot of people will say, why bother, right? And all of these are national markets. Crypto is a global market. And when someone wants to launch a product, someone wants their product to be traded, it totally makes sense that you want a global market. You want something that's trading 24/7 and huge volume and a lot of people coming in. So I don't see a big future for isolated, insular national markets. It just wouldn't make economic sense for anyone to either offer or trade them.
There's a lot of people on Wall Street that if they're watching this right now, they're going, oh, that makes sense, but they're also a little scared because, that's a totally different way of looking at the problem in the markets. So, I mean, gosh, in 10 years, if we could get to that place, I mean, that would establish crypto as pretty much the de facto in all kinds of futures trading for pretty much any asset. And that basically makes the blockchain then, the foundation for this technology, or makes it the foundational technology to be able to build these kind of systems. So who is your ideal user? Is anyone going to be able to just log in and set up an account on your exchange, or are you targeting it to specific institutions, or how's that going to work?
We are going to start with the retail market for the simple reason that it is very hard to go to an institution and say, hey, we built something yesterday. Why don't you put $1 billion on it? It's just not going to fly. There needs to be a sufficient history of liquidity, operations, security, and the general characteristics of the platform needs to be understood before someone commits a huge amount of money to it. And the retail, in crypto, people are willing to try almost any new tech. So I think that history is fairly easy to get. And once we have that, then I think it's a lot easier for institutions to talk to their treasury departments, to talk to their lawyers, to talk to the regulators, and start experimenting with small amounts of money. And once they feel that they have the confidence, they can start trading bigger and bigger.
And what's your marketing plan? How are you going to reach the crypto community? Have you built a Telegram channel or done anything on that front yet, or is that something you're going to be launching soon?
We do have a Telegram channel. It has, I think, just under 4,000 people. We have Twitter. We are engaging a very reputable marketing agency that is it's a big name in crypto. And in case you guys don't know, Consensus is a partner, and they supported us technically during our ICO, and I shouldn't say ICO, token generation event. We're going to be working with them and focus on marketing, making the marketing very aggressive. We engage with the community. We have webinars every 2 weeks. We get all the users' input on what needs to be built, and we make sure that we're going to make sure when the product is out, the marketing is in full blast.
Awesome. Well, before we wrap up, is there anything else you'd like to add? How can people find you?
So our website is leverage.io, and please join our Telegram channel. It enables you to contribute, and in the early stages, you have the ability to shape the platform if you are interested. And we give bug bounties. We make sure that people who contribute are compensated in one way or the other. And we really listen to our community and make sure that we are building something that the community wants.
Yeah, no, I mean, this sounds groundbreaking. This sounds like I think for a lot of investors, it sounds like you're taking their needs into consideration and really building a solution specifically tailored to them. And that's what the market needs.
And I'm a trader, and I'm building a trading product for traders. So I do know both sides of the equation. I know how it feels when you're a trader and the product behaves not in your best interest. I do know as someone who has built an exchange, the difficulties of creating things in the right form. But I believe our team has all the ingredients needed to create a kick-ass product. And we hope to revolutionize this whole, the derivatives trading arena.
Yeah, I'm looking forward to your launch, and I'll love, I'm gonna love to check this out.
Fantastic.
Awesome. Well, thank you for coming on the show.
It was a pleasure being here.